How to compute taxable income in respect of gifts? Taxability of gifts received having value in excess of rupees 50,000. If the gift is in cash, then it is taxable irrespective of the fact whether it is without consideration or whether there is inadequate consideration. But if the gift is in kind, then there are again two bifurcation. Gift in kind would be in the form of immovable property or movable property. First we take immovable property. If a person receives an immovable property without consideration, then it is taxable. And the consideration is inadequate, then it is not taxable. If the gift which is received is in the form of a movable property, that is without consideration, then it is taxable. And even if there is inadequate consideration, then also it becomes taxable. Exemption of rupees 50,000 is to be allowed considering aggregate value of all the gifts. That is serial number 1. In the above table, wherever it has been written 1, it means that if the aggregate value of all the gifts, if it exceeds 50,000, then it is taxable. So exemption of rupees 50,000 is to be allowed considering aggregate value of all the gifts. 2, it is applicable wherever it is written 2. I think so it is only in case of immovable properties without consideration, where it is not taxable when the value of individual property gifted is less than rupees 50,000. That is, the exemption limit of 50,000 is to be seen per se property. Amount of rupees 50,000, that is the exemption limit, is to be viewed on year-to-year basis, but is not a threshold limit or a deductible first amount. Now, as we had seen in the previous slide, that movable property, then what is included in the movable property? It includes shares and securities, jewelry, archaeological collections, drawings, paintings, sculptures, any work of art, bullion. Good news is that gifts received from the following persons or on certain occasions are not taxable. If the gift is received from any relative, it is not taxable, or on the occasion of the marriage of the recipient, or under a will, or by way of inheritance, or in contemplation of death of the payer or donor, or from any local authority as defined in the explanation to clause 20 of section 10, or from any fund or foundation or university or other educational institution or hospital or other medical institution or any trust or institution referred to in clause 23C of section 10, or from any trust or institution registered under section 12AA. Here relative means spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister of either of the parents of the individual, any lineal ascendant or descendant of the individual, any lineal ascendant or descendant of the spouse of the individual, spouse of the person referred to here and above. The whole relative definition is being presented over here in the form of a graph, which shows that the donation which is received from a brother-in-law, sister-in-law and their spouse on the side of a wife, as the case may be, or husband, wife, and it would be exempt. Here it reflects that if the recipient is uncle, that is mama, mausa, chacha and their spouse, or if the recipient is HUF of any relative, then under those circumstances it would not come under the definition of relative, and any gift received would be taxable. If a partnership firm or a company in which the public are not substantially interested receives shares of a company in which the public are not substantially interested, without any consideration the aggregate fair market value of which exceeds rupees 50,000, the whole of aggregate fair market value of share is chargeable to tax. For a consideration which is less by an amount of more than rupees 50,000, compared to the aggregate fair market value of the property, then the difference between aggregate fair market value and the consideration is chargeable to tax. All these provisions are applicable with effect from 1/6/2010.